Hey guys, welcome to this week's episode of the Weekly Squawk. I'm Pav, lead market analyst here at Swyftx, and this week we're gonna just start off by reviewing something that we spoke about last week. We dove into just the whole idea that there may be some potential sellers entering the market, particularly as ETF buyers were nearing their break-even points. The idea that I spoke about last week was that psychologically, you think about yourself and anything that you've invested or traded in. When you've been potentially in the red, like many crypto investors in the last few months, the market's been quite down since January. We have seen a recovery since that February bottom across most markets, but now we're approaching a known group in the market where the data is quite available, quite public, the ETF or exchange traded funds participants, nearing break even. And I just wanted to share that just recently we had tapped that level. So the ETF cost basis, we're at that point right now. So we're heading into a pretty key, I think, weekend and next week, where we could start to see some signs of what's to go. Will they or won't they sell? So I just wanted to flag that one for everyone today. There'll be a link to the previous article in the notes. But this week, what are some other ways to view where the market is today compared to previous cycles? And I also just wanted to provide everyone with a bit of a chart, some technical analysis just to drive this all together. I think this is pretty relevant, again, because we've talked about the ETF bias being at break even. Some big decisions are going to be made in the next coming days and weeks, I feel. And when we look at charts like fear and greed, like this one here, we could see that obviously when the market was down, we have been cratering and coming up sideways, and we've been up. We even hit a neutral territory just this week on the 5th of May. And many people, I'm sure even yourselves potentially, have seen even your altcoin portfolios come back to life again. There is this just inherent wind of optimism in the market. And with some of the geopolitical pressures easing over, no further escalations majorly, it's been a pretty interesting way to see the market respond. But I think what I'm more interested in now is just understanding, okay, what's all the things that we know about the market? The first thing, there's one of those points that we mentioned around the ETFs being at break even. Let's turn to something a little bit more cyclical, a little bit more patternistic. I don't even think that's a word, but this is looking at the price movement of Bitcoin from prior cycle highs to where the eventual bottom formed in bear markets. And this is looking at the last 3 cycles. This one is obviously the current cycle that we've seen play out. So that's at those highs in October. But the key trend here is it's pretty simple at first glance, right? Every time we've seen a bear market bottom form, it's taken about a year. And in 2014, it took a year and some change. So when we think about it from a time-based perspective, and when we step away from price, that kind of puts us somewhere in the realm of potential bottoms forming on a time basis between October and December this year, so the back end of this year. We're currently at about the same place that we were in August 2022, for those who are interested in knowing. And then what happened in August 2022, we did see a rally and then a subsequent sell-off again. Bitcoin specifically dropped about 20-25%. Altcoins got absolutely slammed a lot harder than that as well. So just giving that sort of perspective that as good as things are looking, we are historically moving into that part of the market where we have seen relief rallies in the past, and we have seen bear markets draw out further. Now, this isn't to say that this is what we're going to see. I think it's important to go into any situation with both lenses intact. What am I going to do if the market's going to go higher? What am I going to do if the market's going to go lower? And that's where technical analysis can be quite useful. It helps draw lines in the sand of, if this happens, I'm going to do that, right? That's basically what we're seeing there. So this is an ascending channel where we're just connecting the lows that we saw in February and March and the highs in between, and we're constructing just a channel. And the important thing to notice here is when we did see a breach to the downside, the market had every opportunity and reason to go further lower, but it didn't. We saw buyers step in, they were willing to pay a higher price than what sellers were giving it to them, and we reclaimed this channel. And we've since April seen this very steady trend with an ebb and flow to it, but it has just steadily creeped to the upside. Now, the key takeaway here is that we're back at the middle of this range when we are looking at this ascending range, and we've been there 1, 2, and this is, I guess you could call it the 3rd or 4th major phase of us being at the middle of the range. So from here, there's only 2 things that could really happen, higher or lower, right? So that's all we're waiting to see now as we head into the weekend. Now, we talked about those ETF buyers that essentially driving price at a position where they could start to take some chips off the table, and if they do, it might add some pressure on top of Bitcoin. We have seen fear and greed neutralize a little bit in recent times as well, but there's every reason for us to go higher or us to go lower. But again, if we do believe that this is some kind of potential mid-bear market relief rally, it may seem reasonable to either start to turn around here, or let's say we did go up a little bit higher towards even the 2026 open, maybe then start to see sellers come into the market, start taking profits, and we just don't see people buying enough propensity to keep the trend going higher. But then again, if we do see it climb up higher, we're looking at previous quarterly highs then, we're looking even higher than that. The 100K mark seems to be on the tables then. And maybe we do have a cycle that's just a little bit different to every other cycle. But I think holistically, we'd rather wait and see it than predict for it, right? And then alternately, if we do see this market breakdown, we'd obviously be very interested if we did have to retest the bottom of this channel, how the market responded. Last time it did fall and reclaim it, so we did see buyers get interested. Do we see that again a second time, right? Or do we see the opposite? So you can see how we're really just at a really key decision point heading into that second quarter of the year as well, being at the start of May right now. So very interesting times. But that's it all from me here at Swyftx this week. We'll be back again next week to keep you guys all informed. Catch you next time.